Hello viewers, in this video I'll be going over gold miners, ETF ticker symbol GDX. Today we are down around 39 basis points and we have about 1 hour and 30 minutes left in trading. On the 1 hour chart, we do see the 1 hour MACD turning negative and a good possibility we may reverse and turn back to positive MACD. On the 4 hour chart, we are still on a positive on the MACD as well, and we got off of overbought territory on the RSI. And we have also a good possibility we may touch the 50 moving average as it coincides with the gap, and we may have a chance to fill in that gap. And on the daily chart, we are above and we are overbought on the RSI as well, and I do see this as support, the 9-day moving average. That's the first support, but I'm more considering this as the support, this gap, and that coincides with the 18-day moving average, so I'll mark that as potential support. And for the resistance, as you can see, we made new 50-day or 50-week highs, and that would be our resistance if we were to continue on higher. So if we were to move down lower, that price movement is roughly around, I would say, about 6% move down. And if we were to continue on higher, that price movement is about 2.5% move up onto the next module. I'll compare today's current trend right here with this trend that dated back to November 20th, 2013 to February 19, 2014. I'll point out why these two charts are similar. So what we have here in the beginning of the trend, we were below the middle Bollinger Band for several days, and we made a quick reversal touching the upper Bollinger Band right here, and we proceeded to continuing to gap up further. So we have two instances, it constantly keeps going up further without any rest or reverting to the mean in the middle Bollinger Band. And we have this gap here. I'll just mark this gap. It says, let's make this purple. And right here in this trend, we started off in the beginning below the middle Bollinger Band, and we made a quick reversal, and the trend touched the upper Bollinger Band right here, and another attempt right here as well. And then we see another gap as well in here that is similar to the current trend. So what we have is 1, 2, 3, 4 points. 1, 2, 3, 4 points. So there's reason to believe if the trends and patterns are the same, the forecasts and the outcome would also be the same as well. So let's head to the forecast model. So again, the trend that we took a look at was November 20th, 2013 to February 19, 2014. So let's go day by day where GDX or gold miners went to back in 2014. So one day out, 2 days out, 3 days out, 5 days out, 6 days out, 7 days out. So back then, gold miners was up around 80, 85 or 87 basis points. So we have a good chance that gold miners will remain up and flat, or to the upside and sideways action. And here's the line chart that I compared it to. So we have the current trend right here and the 2013 to 2014 trend right here overlapping. And they have good similarities and identical patterns. So that is all. If you enjoy this content, feel free to like, subscribe, and thank you for watching.